that I share with you for around 60 minutes. All I'm doing is to give you what I know. And remember, Community CPA, yes, we are a service company providing accounting, tax, audit services to our clients. However, we're also a very special CPA firm that coming from you and wanting to return our knowledges and our help to you free via this vehicle. And we have been doing what we are doing today for the past 4 years. So if you just coming into our website, and for example, let me show you. So you see, this is this is actually our YouTube channel, and this is our YouTube channel where we put in our talking histories, the webinars, the minutes, the talk I did, and other professional staff and the partners did, all in here. So if you subscribe to our channel, you're really gonna get into a wealth of knowledge that you did not know exist. So I would encourage you to subscribe to our channel. The more people subscribe to our channel and make our channel more robust in reaching other people who might need this knowledge. And you know, there's a really very simple, common sense, old saying goes, knowledge is power. It's like a nonsense. It's like, I of course know that, Ying, don't tell me that. I tell you that because knowledge is indeed power. If you know how to apply, then you know how to make your life better. And you know, human history is all about accumulating knowledge. If we don't have a limit in life and we just live 100 years, 1,000 years, each person, we all gonna become good goddess basically. We know everything. And so our knowledge is limited. You got 100 years here to learn, to apply. Sometimes some people can learn very well from the books and from listening to other people talk or from watching YouTube channels, but some and just not really have that ability or time or opportunity to learn. When they don't have that, they just fall behind. They don't know they're fall behind, but they are behind the time. So with that said, I want to tell you that come to our site, and this is our website that we have for you, and you can go to our home site, which is, you know, when you log in is always this way, communitycpa.com. If you want to make an appointment, that's where I was earlier. And in here, you see the partners listed. If you want one of us to spend 45 minutes with you, there is a fee attached to it when you select us, and you will see how much we charge for that 45 minutes, but you can find time right away. And if you do your homework and know exactly what you want to get, and we'll promise you that if we don't get you the answer, and we don't charge you. But if you get on with us, we know for sure we'll give you the answer. So it will be worth it for your investment. And we are, again, we are here to share our knowledge. So our webinars is not chargeable, just like you know, and you want to take responsibility for what you learn from here. But today, very interestingly, we have a new client came on board, and his name is Bill. And he came on board. He runs a very successful restaurant in Midwest, and his annual sales is over 2.5 million. So you know, when I say that, you know how good that restaurant is. He doesn't have a big chain stores or anything like that. It's a one restaurant that he established for the past 15 years, and he's very successful. And you know, I actually know him. I actually know his restaurant, I don't know him, but he's here. And he's here because he get audited. And he didn't get audited once, he get audited twice. He got audited again and again. So I want to look at his case with you and bring to you the most common audit a small businesses are facing via Bill's story. So that way you remember. And I also promise you, next year, November 2nd, 2024, I will bring Bill's story back up again with you, and we will talk about what had happened in the year and how is his case going, and maybe if we got it all done, maybe not, and how is his experience with 2023 taxes, 2024 services that we provide. I'll just, I'll get Bill's permission to talk to you about everything happened with him. If it is possible, I'll bring him into this webinar. But our goal is to give you a good example so you understand it's not like I'm buffaloing about audit and scare you to death so you cannot do your business properly. No, I just want to bring awareness to you. You know that awareness is halfway done. If you have the awareness, you are already halfway through that journey. So if people knows that they're gonna be addicted to alcohol, they would not even drink because they don't have the awareness. That's why they go in, they stuck. So awareness is literally everything about our life. I mean, if you are aware of yourself, and you will be more successful. Without awareness, without knowledge, and we have no power. That's just what it is. All right. Most common audits small business are facing, and the Bill's story. William, and he go by Bill. About firm and CEO information. Just 1 second about bragging about myself, right? And I practice accounting, tax, this industry for all my career life, and I don't really do anything else. I've never really had developed any other careers, and this firm is an establishment of a need of the community. That's why we call ourselves Community CPA, not Ying CPA, right? It's just not about me. It is about the need in the community. So I was put in the place to start the Community CPA the way it was. And so now today we have 3 branches. We have around 40 professional staff, and we have 6 partners. I am the founding partner and also managing partner. So you kind of know my role. And one thing that I want to tell you is I'm also an author. If you look at that book, 8 a.m., that was my first book I did in 2019. And right before pandemic, I did that called The Starting Up a Business, really talk about the clients, like Bill's story. Inside of that book, how people start their business. Some people start their business because the parents give to them. Some are just totally rebellious from their parents' will and they did something crazy and they become a business. And some are just stumbling into somebody in the bar and start a business. So there's so many stories, right? How people start business. So that is the first book. And I also already published. So this book is online right now, just published about a month ago. It is a 10 a.m. book that is growing your business. Yes, grow your business. Don't think that you can start a business. That means you can grow a business. It's just totally not the same. That's why there is an old Chinese saying that the person who established the country may not be the person who keep the country. Same thing. The business you establish, you might be just good at establishing because you're a risk taker and you have no patience. You just get things started. So you started it. But are you going to grow your business to the next level to like how I draw the arrows that goes up? And no, maybe you're not the person. But you can be. If you read my book, you'll know the qualifications, the stories, the advices I would give you to become a person that can grow your business. So I am working on my 2 p.m. appointment with Ying book. That one is expanding your business. So in that book, I will talk about organically expand your business or through merger acquisitions. So it's just the next step of business. You grow your business already. You get to the point that you have appetite to take on other businesses becoming bigger, becoming faster, right? So that is really where, the 2 p.m. comes about. Then we have 6 p.m. and that is retiring from your business or repurpose of your time. So it is really a book that I haven't really started yet. So let's not talk about 6 p.m. Just I'm working on the 2 p.m. And you can find the 8 a.m. and 10 a.m. book online now. And anywhere you just type into the name, you'll find the book. All right, no responsibility disclaimer. I sort of covered that. So please don't just take internet words and pretend that that is what you're gonna do. Okay. Story about Bill. Community CPA is a brand new onboarding client. We welcome Bill come to us. Like I told you, his restaurant is pretty well known. So when he knocked in Community CPA store and we embraced him. Yes, come to us. We like your business. And however, he brought up this list of problems that he have right now. Okay, so let's just go through his problems. From June 2019 to December 2021, one of the disgruntled employee that he has reported his restaurant to DOL, wage and hour division. The DOL audited Bill for a year and a half. At the end, the DOL assessed $560,000 payment due. So this was already done. And now it is just a bill that he needs to pay, of which this 560,000, 280 is the owed wages to workers, including that cook who reported him, and then the other 280,000 is liquidated damage charge. That is a term DOL is proudly using. So if you owe $1,000 to your employee and the DOL asked for $2,000, DOL also said that they will give the $2,000 all to your employee. So imagine this cook who reported Bill to DOL, and so he is not only getting the money he wants to get and doubled. Okay, just hear that. And worst of all, Bill had already spent $275,000 in legal fees. I only know that he spent that legal fees because I noticed his professional charge of 2022 was going off the roof. So I was asking him, what's going on with this particular deduction? Because I'm trying to make sure that the deduction is in line with his business. So he said that $275,000 was actually legal fee to pay to the lawyer for debating of DOL. Look at that, folks. Look at that. And Bill is not making $1 million. And yes, he has $2.5 million sales annually, but that doesn't mean he actually made a profit of $2.5 million. His profit is very normal. It is about 20 to 10% of the sales. But look at how much bill that he is paying just for that one audit. This audit is already concluded. What we have on hand right now, it is just making the payment. It is a lot of payment, and the bill could not get that paid as of now. He came in last week, so he's still paying it. In July of 2022, IRS audited bill, and that audit is for income tax audit. This audit is for year 2019, 2020, and 2021. It is still going. So far, he spent $95,000 to his CPA. So you can see that IRS reacted to that, right? So he started July 2022 and auditing for 19, 20, 2021. And I want to, tell you a couple of facts here. So this is a referral audit very clearly because he finished the audit for the DOL. Then DOL referred the audit to IRS. IRS coming in July. And normally IRS audit is 3 years audit. So they got 3 years right in front of them. Of course now it's already 2023, so 2022 taxes already filed. I won't be surprised if 2019, 2020, 2021 audit are not going smoothly. IRS is going to review your 2022. If there's anything that doesn't look happy for them, and the IRS definitely can come back to you and they continue to audit you, because once you get audited, it's like you are marked with this special flags, and you will be audited again, and we have seen that. Not everybody, but we have seen that happen to clients. So, so far he paid that much for service, and he's still dealing with that income tax audit. In February of this year, the state audit started, and the audit for sales tax for the past 10 years. So it is still going, and he has not paid bills yet to the CPA, and so, but he knew that it is the 26,000 invoices already there. So he has this audit. So why is he having the sales tax audit? So the IRS is having a referrals and to the state. The state decided not to do the income tax audit, and instead they want to look at the sales tax and the use tax. So in September 2023, just right before he come to us, SBA compliance audit started and auditing him for RRF eligibility. So look at that. So poor Bill, and he just doesn't understand why it is all coming like this. And so he brought to us, and just when he comes in, when Bill came to our firm, and it was not because he decided, okay, I'm just gonna go to Ying and talk about my problems, because he got another one. That's a ERC eligibility audit. So Bill feels like he's having some kind of karma, and he needs to fix it or whatever happened. So he's here talking about his situation and wondering about all these audits that he has. So, really, Bill said that, Ying, is there any more audit that they could do to me and, to my business? Is this all the audit I'm going to have? And he's asking me that question. So I said, almost, not all, almost. So here you go. So I have this slide, because this is what I told Bill. Okay, so the most common small business owners audit are the following. And pandemic related, that's one category. The income tax related, second category. Use and the sales tax, third category. And also Department of Labor. I label that as a labor and hour compliance audit by DOL. Then you also have classification audit, and then Bank Secrecy Act audit. You see all of these, the one with the little triangle stars, those are the ones Bill did not have. Bill, it's not that Bill would not get it. I mean, he just haven't get that yet. But the blue, the green one, you see right there, he got all of these audits. So if we just count on numbers, we have 3 compliance related, then we have 5 other audit. So 8 audit, and the Bill has more than 50% of audit he's already on his desk and he needs to deal with. So this is small business story. Small business owner story today is to get you audited left and right, up and down, inside out, and you need to prepare. You need to know. Okay? It is not, it's literally just what the government do, especially if they got trillions deficit, and you think they can live without auditing you? Of course not. The government has to survive. The road has to be built. The wall has to be built. So all of these money is coming out of taxpayers. And if we don't pay taxes, where is the government going to operate under? Not just borrow money from China, right? And if Chinese decided to loan money to the government, I mean, we have huge issues right now internationally. So really, this is what they do to small businesses, and having these audit right here. And so they'll come to us and say, okay, Ying, I have this audit and it is already here. So I want you to help us. And what's your plan? What can you do? So obviously I can promise the moon. So this is the slides that I am promising the moon. Like I said, I want to revisit this plan next year this time. So me, we meet again. Let's talk about Bill. So what I do here is, this is the plan I give to Bill. I just want to show you. So we're going to review DOL investigation file, determine if Bill wants to challenge the funding, challenge the findings by the auditors and request hearing before DOL, or touch base with Bill's attorney to see whether that is really something already, maybe it's already done, or what's the status on the payment schedule, because he's paying the payment and it's really hard for him. So we want to know. The case is already closed. Basically, Bill already signed to be okay to pay. So the chances of flipping it is hard, but obviously there's an attorney involved in there, so attorney can help, right? So that's what we want to understand. So if the attorney goes, Ying, don't even touch it, it's done, then what we do is we're just gonna be booking the payment into the financial statement to make sure that we plan that cash flow. You cannot be like just memorize, okay, I'm going to pay $50,000 a quarter on this one, and just keep that in your mind. No, you want to build that into your operation. Maybe because of that, you need to lower your workers' salary, or there's more details about how he was charged by that amount. And some calculation by DOLs was absolutely disagreeable from my standpoint, but it is already done that way. But what we can do is to make sure that we restructure the payroll side of pay, and your employee may not lose any dollars, but we want to define so clearly which is the regular pay, which is the overtime. So I don't want Bill to pay $4,000 to the cook and tell them that this is their salary. No, because they work 60 hours a week, but if you use minimum wage and the times overtime, $4,000 was enough. But what happened is, because that wasn't in place, so $4,000 was divided by the 40 hours a week, and so the rate was like $28 per hour. And then with that, the DOL add overtime, 1.5 on there, saying that Bill owes the worker. So not fair, and that's not the intent of the business owner, but it was being manipulated, or I use better words, positive words, was being understood by the DOL to be another way to consider this $4,000 monthly payment. So those are the things we need to do. So we want to work on the payroll, but we first want to know what exactly he was charged, so we can fix exactly what needs to be fixed, right? The number 2, contact IRS income tax auditor. Contact IRS income tax auditor and introduce our representation of Bill and his business. We will tell the auditor that, hello, and this is Ying from Community CPA. I am engaged by my client to take over that audit, and I want to review the working document and see what was submitted to you. And hey, dear auditor, could you give me a little more time so I will get back to you on what you requested on IDR 12, right? So lay out all the documents that have not been submitted to the auditor, and really understand what would come the next. So when we do income tax audit, we actually know exactly the process and the audit points that it's coming through, because IRS also have audit guidelines for their auditors. Have you ever read those guidelines? If you have not, that tells you don't really know what they're looking for. If you want to know what the auditors are doing, they are doing things by the book. Right or wrong, that is by the book. So you want to understand what they're doing, and in fact, those informations are on IRS website. You can research and study. And then the third step is that we contact state revenue to connect with the sales use tax auditor. To connect with the auditor, I want to understand from the auditor why they're being audited and how, what document they still lacking. So what can we submit further to speed up this audit And I also gonna tell the state auditor that, you know, our client have ongoing 3 other audits, just like, you know, President Trump, right? Getting sued, getting charged, getting convicted in all these court. So he's telling other judges saying, oh, let's delay this court because I have too many other. So my client is also qualified for that. So we want to tell the state auditor that, listen, we got other audit going on, so can we slow down on this one? And they have 10-year statutes, they can audit 10 years. So I don't think it need to be in such a big hurry. And then we also want to obtain RRF, application document, annual report from Bill, and which he sent it to SBA. We want to contact SBA auditor to arrange a face-to-face meeting. And the reason I said that is because SBA, just like IRS, has a local offices too. So when you get audited by compliance auditors for SBA, and really request that to be on the local area, because that will make your audit going smoother. And when you meet a human being, when you bring this auditor into your client's place and have the auditor has a understanding of the kind of work environment, the kind of money, and the kind of demeanor and the look and dress of how Bill is, it will make the audit a lot more personable, a lot more, I want to say that it lowers everybody's blood pressure. So it is kind of like, okay, we're dealing with real human beings, and so we are cautious on how heavy we're gonna put our hands on, right? So that's what we plan to do. And I contact IRS and inform the ERC auditor that explain we're under income tax audit, so ERC auditors should give us a little bit of space. The reason is whatever on the ERC side, remember they were audited by 2019, right? So if the audit for 2019 changes the number, so let's say 2019, it changes the sales amount, increase their sales, then they may be qualified for more ERC. So I am just saying that there is a connection between ERC audit and your income tax audit. So I would call the ERC auditor that let us finish income tax audit before we even talk about ERC audit, because we might have to make some mathematical changes. Right or wrong, maybe my client gonna have less income, so he doesn't even qualify for ERC. Then we're gonna refund your ERC credit, right? So we're gonna talk to the IRS. And going forward, being a community CPA client, these are the things we do for Bill. We review their 2023 financial statement because he came last week and his accounting has already been done for many, many months. So we want to review that because I am not going to be comfortable to file his taxes without knowing how 2023 was done. Then I want to do 2023 tax planning right here, right now. That's almost the second thing I do after I review all the financial statement. Then I want to review his POS system because he's a restaurant. He told me that he has a POS system, and I want to make sure the POS system is implemented, set up properly. I want to make sure the local tax, sales tax is all set up, and also the cash handling procedures in the store, in his restaurant, that need to be done, and the POS should track on those cash amount. So start accounting in our system and then move away from QuickBook. And the QuickBook is accounting system that IRS has license to. IRS auditors don't need you to do anything for them. They just take they take a thumb drive, they take all your QuickBook data, and we have clients who doesn't know how to use QuickBook, and it's actually a pretty large operation. They only use QuickBook to create an invoice and do collections. So it's only like the receivable piece, right? So they delete the QuickBook sometimes, and when this is many, many years ago, they get audited. The auditor find out that in their QuickBook, he regularly delete about $1 million to $2 million revenue every year in QuickBook. So that is absolutely a question from auditor. Why are you deleting those receipts? So what's going on with those millions and $2 million? That was a big deal. And then it turned out to be my clients are so silly and they have no idea what they're doing with QuickBooks. So once they receive the invoice, when on the QuickBooks, if you have a receivable, you already booked the income, you already reversed your receivable, right? Your income increase, your reverse decrease. So what happened is, then they have another person would put in the bank information. So they will book the income, the deposit again in income from the bank. It just, let me tell you, it's a mess. So that's why we move people from QuickBooks to our system, because we do not want IRS to come in to look at your general ledger. If they want general ledger, we'll print it for them. When we print it for IRS, we also already look through our general ledger to make sure that is actually done correctly. So that's what we're gonna do. We're gonna remove Bill from QuickBooks and starting in our system, and we will retrain Bill's manager for payroll practice. And the manager cannot just tell the cook that, okay, you're paid $4,000 salary. No such a thing. Everyone in the restaurant, other than manager, they're all paid by hours, even their cook. So their chef need to be told, your hourly rate is $10. Because you work 60 hours a week, so you get 1.5 times of your pay. And so with that calculation, your monthly wages is coming in about 4,000 less, 4,000 more, just depends on how many weeks we have and days we have in the month. Even though you will pay them by month, but calculation is still done by weekly, okay? Not every 2 weeks, it's every week, because we want to know the overtime for the employees. So we will implement procedure and rules with Bill's managers and aiming to prevent another audit from DOL. Boy, if you get another audit from DOL, you're not gonna get any, there is no excuses anymore. This time, I don't know for sure because I didn't spend that much time to look at the DOL file. Maybe the original charge was $1 million. The lawyer brought it down to 500 some thousand. So, but if you get audited again, same mistake happens, forget it. And not to say the IRS won't forgive you. I mean, even if I am the auditor of DOL, I won't forgive you. Why don't you learn? And that's the whole reason why you get audited once, you never get into that again, okay? So that is what we're gonna do with Bill. And we're gonna draft the return for 2023 and pay estimated tax before December 31st, 2023. So that is something we do at our firm. We don't want our client to pay taxes when we file taxes next year. And a file extension for his business return and 1040 because I am really hoping the audits are done. I don't know. There's so many audits, so maybe some of them just not gonna be done. But I will file extension because I want to wait until the audit to be done as much as possible, so my return of 2023 can be more accurate. Does that make sense? Then of course, if you file extension, then give us time to do data match. So that data match we do will guarantee you not having difference between your book and IRS book. So with that said, a lot of our clients, whether they're running good business and they don't want to be audited, they do data match. But some of our clients are older, they don't have a good handle of what they have, they also do data match. So we will then filing your return with confidence in data and with confidence in your financial statement and with zero mistakes. So that's what is our work plan for Bill. So next year this time, on the 2nd of November of 2024, and the first November Saturday webinar, we will talk about Bill and how he is doing. With Bill's permission, we can talk about his experience in working with Community CPA. Here's the list of content we will cover that day. We're gonna update on each audit and the conclusion of the audit. And how did 2023 income tax filing goes? I'll get input from Bill on that. How did 2024 accounting payroll sales tax services goes with us? I'll get input for that, and put that on your calendar. And join that webinar that day, and know that we talked about Bill this year, this day, and he's new, so that's how much I know. This was our plan. That I already showed you the plan, and this is what we're gonna do. And next year, this time, we'll see. And so now the next few slides is all about audit. So because Bill is getting audited for majority of the varieties, and so I want to go through that quickly with you, so you understand what you need to look into, and be mindful of what you have on your business book, right? Bill is a restaurant owner, and if you're doing other businesses, these some of those compliance audit may not apply to you, like RF. If you're in a restaurant, you don't get that. But majority of the audit that he is talking about here, it probably applies to you. So ERC audit. This one is actually new. I put that here as the first because we start seeing that coming in. And the ERC audit is the one that the government just announced to stop processing ERC because there's a lot of fraudulent returns, fraudulent claims. So this area, government has a very little confidence in terms of the quality of application. So they will audit, and you may get picked for being audited, but we just want you to be prepared. So these are 5 areas they audit. They want to determine, number one, they want to determine of small versus large eligible employer. See, this whole audit, the beginning of it is all about eligibility, like how whether you even can submit your application and get the credit. So the gross receipt test, this is where I'm saying that I need to tell the ERC auditor to back out for a little bit, because our 2019 income tax hasn't even been done yet. And if that audit is done, maybe our sales is higher, maybe our sales is lower, who knows. But if it is higher, then maybe I have more quarters that can qualify for ERC, so we'll see. So with that said, and the other one they do test is suspension of operation. And the suspension, a lot of times, people just saying government order, that's all they are talking about. But you need to find out whether the government order in your state, in your county, in your city is actually working for you. And our firm, we have Dr. Howe full-time on government pandemic-related program support. So if you want to know things that you can't find the answer and you don't know who to ask, but this is something very important to you, and you can go onto our website and actually book Dr. Howe's time. Just get your question prepared and go on there. And I don't remember his rate, but if you go on, it's on our website, so you get his time to answer your question, because he is absolutely the expert for government programs. And there's law firms and accounting firms are coming to us to consult with him. So that's how good he is. So I want you to know that, okay? That's Dr. Howe at our office, and he's one of the partners. Then of course, your ERC credit calculation, right? Math, just simple calculation, but a lot of people do it wrong. So that's part of the audit as well. Amendment for taxation. So once you got ERC credit, you need to amend your tax return. That's a big deal, folks, and you need to know how to do that and making sure that you got that done. And don't trigger ERC audit just because you didn't file amendment, okay? So with that said, we move on to income tax audit, federal government. The common triggers for federal government income tax audit, and you see Bill get audited for 2019, 2021, 21 is not because of these ones, but because of related audit. So you can see there, and I have you the data connections from other parties and the reports by whistleblowers. Those are all triggers, right? So in this case, it's DOL, and DOL's report to IRS triggered his audit. So data mismatch also is a big one. I listed that as a number one because let's say if you have an income if you have an interest income on your tax return, but you don't know you have it, so you just go ahead and file your taxes without that. But IRS has the 1099 interest income in their file, filed by the issuer, by the person who paid you interest, or the bank who paid you interest. So that's a data mismatch. This is where we say we actually do data match for Bill, especially now he's in audit. We just cannot continue going on to have more audit open. So we need to nip the bud somewhere, somehow. So data match is one of our big way to nip the bud so it won't happen again. And then data deviation score is something IRS calculates inside. So when IRS got all of our tax return in the system, what they do is they calculate that deviation score. If you are outside of the norm range, you'll be ranked out for audit. And a good example will be in the restaurant, your cost of goods sold to sales ratio. Your cost of goods sold to sales ratio in a different restaurant, let's say you are a steakhouse, then what we will see is about 40 to 45% in Midwest area. I'm just talking about Midwest area. And let's say you submitted your cost of goods sold is at 80% of what is an 80% ratio, not 40%. And you're geographically belongs to Midwest area, then you have that. You know what's gonna happen to you? Yes, you'll be audited, okay? Because your deviation is way out of norm. And what are you doing? Trading drugs? That's what IRS is thinking, okay? Data connections from other parties. If let's say if somebody get audited and this person get audited and says that, oh, I deduct $1 million here because I paid Ying for $1 million on tax filing, and you don't think the government gonna look at my tax return to see whether I reported $1 million on a tax return? Of course they would, because it's too big of amount. The $1 million on tax preparation, normally that should be what, $1,000. Now you say $1 million. So those kind of strange, out of norm connections, the IRS will look at. And report by whistleblowers, we all know that, right? Bill's disgruntled cook, and that's what he did for him. And he actually, I think, I would imagine that he's not there anymore, but I actually don't even know whether he's there. And next time when I report on Bill's things, I'll update on that one. And so, of course, if you use Schedule C, Schedule E, and you have asset and cash in other countries, and you claim EITC, CTC, then you can trigger audit. There's ways to minimize your chance to be selected for audit. Understand the computerized system and the checkpoints. So you really do want to understand that. And working with IRS, every time I work with IRS and my 3 years time and being the advisor of IRS in the tax in the advocate panel, and I actually pay attention to the system side of things. So you learn that you know it. And these are just system generated notice because you simply just made error, and those are things that you can avoid, right? And stay legally compliant with government procedures and the requirement. I mean, how hard is that? I would just tell you that there are characters, there are business owners, I know. I have met them before. And what they care is just make money. They want to make money, big money, even if it is wrong, fine, I'm gonna take it, then just disappear in the thin air. But if you are one of those, you are not even gonna listen to me. But if you are listening to me, you probably those ones really want to grow a legacy out of your life, right? Pretty much like myself, and I founded Community CPA. I did not want anything wrong that not in compliance with the government prevent Community CPA to become one of the largest CPA firms in the country. That's my goal. That's my grand goal, my vision, and I can see a lot of people and businesses need me. I don't think President Trump would care to use our service, but there's a lot of people who has done different things, right things out there, and they didn't have people to take care of them and represent them. We can be the one, right? So with that said, and for growing, sorry, let me drink some coffee. I made some coffee today. I just bought a coffee maker at home. Don't know how to use it. So I tried a couple of times already. It wasn't successful. But today, I did 2 cups already. It's working. Can you believe it? I can't believe it. I feel like I am very bad with everything else other than the computer and the equipment at the office. So outside of that square footage, I just become someone that I don't know anything what's going on. Anyway, with that said, and stay legally compliant, that's really important. If you want to be big, if you want to have a long-lasting business, ladies and gentlemen, my heartfelt advice is to follow the rules. It's not worth of you to try to get around. Not worth of it. Because the energy, the fear, the worry you experience, not worth it. So that's really important. And you can imagine if you really did everything properly and you listen to the advice and you learn how to do it right, why are you worried about all these audits? And even if you get audited by DOL, you're probably going to come out just fine. DOL going to walk away. It's not like DOL have never walked away from business before. We have many clients audited by DOL. We submit document and we present and we're done. So it's not like everybody meet DOL is all gonna be heavily injured. That's not the case. But obviously Bill, must be not doing something or communicating something correctly. So, but we will help him, and we will stop that, and we'll make him perfect, so he can make $4.5 million without worry about clients, government bothering him, right? So clear, accurate bookkeeping is also very important. I always tell my client that to get your taxes right, you have to get your accounting right. When I say accounting right, I'm not just talking about paying invoices with a check, and I am talking about accounting method and the fiscal years and the tax structures. All of these things allow your accounting to be really good. If you don't know what I'm talking about, I want you to go to YouTube channel to type in 3-dimensional 3D tax planning and type into fiscal year, type into accounting method, anything you think about, type those words in, find those videos, watch them. And that will open your mind, will make you go, wow, I could do so many things to be more efficient with my tax bills. Yes, absolutely. Hire professional to assist, and use your money to save money, and know how much you can save for your industry, the saving techniques for your industry. Okay, so that would be income tax audit. And then for the state, income tax audit also comes from state. In Bill's case, he actually did not get income tax audit from the state. What he got was the sales tax audit from the state. You know why the state didn't audit him? I'm pretty sure they considered to audit him. And because the federal government already audited the income tax. So if the federal government income tax was done, let's say Bill has to increase the sales, then the state will come later to use the government money assessing more sales tax. But to audit again on her book, on his book will make no sense, right? So the state is smart. They didn't do the income tax audit on Bill, but the state income tax audit, has a limitation in terms of years. Remember on the federal tax audit, Bill has 19, 20, 21, right? 3 years. 3 years statutory limitation, that's what federal government has. But in state, it's a little different. So here I'm saying that how long can state audit Bill's business, right? the statute of limitation for federal is 3 years, but for Minnesota is 3.5 years, for California 4 years, Iowa 3 years, and so every state is different. So you want to check that out before you know, because if your auditor if your state auditor come to you and audit you for 1 year, you want to know what is the limitation, because you know 1 year is not limitation. He can open up years on you. So a lot of times when we begin the audit, we talk to the auditor that, can we try to limit the audit in 1 year? And what we do would make you stay in 1 year. So we talk about the possibility of an expansion. So once they audit you, how long can the state collect from the business? The statute of limitation for federal government. So if Bill get audited by the federal government and he owes, say, $10,000 tax, right? The federal government has 10-year limit to collect. So from the day they assessed for 10 years. In 10 years' time, if Bill didn't pay that $10,000, by the end of 10 years, that $10,000 probably become $100,000, but he doesn't own it anymore. So it will drop. So that's what we call the statutory limitation as well in collection. And for state is different. So you can say that several states mirror this deadline with the federal. So federal 10 years, we go for 10 years too. California, Illinois, for example, has 20 years. So even federal don't collect, but the state would collect on their taxes forever. In Minnesota, it's 3.5 years, and from the original due date, or 3.5 years from the date you filed your return, whichever is later. Okay. In Iowa, it's 3 years. But of course, when I talk about this collection side of years, that just means that you have to file your taxes first, right? If you don't file your taxes, your 3 years don't start. So make sure that you know the limitation in the income tax audit and also versus collection. So now let's talk about sales tax. So sales tax audit is the state business, right? So Bill got audited by the state, and he got audited by DOL, then IRS came for income tax audit, then state come for sales tax audit. The business, we say that the state sales tax audit is not like they audit everybody. So they do audit more frequently nowadays is one business becoming an online retailer, because the state is not necessarily know whether an online retailer selling how much to this state. So that's why online sales has nexus rules, and the people are in recent years, and Wayfair has this litigation, and so a lot of practices following that litigation. So we see Amazon start charging sales tax on behalf of you, right? So you don't get merchants from Amazon that you don't pay sales tax anymore. Am I right? But so many years ago, that was like one of the way people buy things and to avoid paying sales tax. So that sales tax audit comes with the online sales, and the tax rate changes. The tax rate changes by the state, and the resale exemption certificate application also are there, and the use tax remittance is also a thing. All of these things are the triggers for the state to look into how you are doing. So I made several lists here. You can take a look. And they report high sales volume, but all of them are exempted sales. Be careful with that, and make sure that you really do know what is not supposed to pay and is supposed to pay. And to prevent getting sales tax audit, folks, and this slide says that to have a good record of sales. When file income tax return, listen to me, folks, to prevent from getting sales tax, use tax audit, is when you file your income tax return, you list your sales tax amount separately so the state can see the amount when they examine your return. You don't just get audited because someone just draw your name. So someone did draw your name, but they look at your return first before they decide to invest time in you. If you made your income tax filing so clean, and you're separating your taxable sales, and you put in your sales amount, and they can see that on that piece of paper, it will get you away from that audit every single time. So I want to just give you that tip and know what you can do. You see, sometimes people come to Community CPA doing taxes, and if anybody says that, well, Ying, I used to do taxes for $50, and coming to you, you charge more. What did you do more? That's what we do more. We knew what triggers you to get audited, and we also know how to protect you. So those are non-spoken skills of a CPA firm. Is something you want to have. And that's why you don't want to work with a place where they file your taxes for nothing, but they disappear without telling you as well. And you want to work with some companies are there for a long time. Okay, so it has a good reputation, and you can definitely verify that, right? So I would say, yes, you should come to Community CPA to work with us and know the different type of sales, right? And make sure that you separate your sales by sales tax taxable sales and by non-sales taxable sales. So I know it's so wordy. There's no better ways to do this. But I just want you to understand your financial statement, your taxes, for income tax purposes should reflect that. All right. Federal Department of Labor audit. We talk about these audits. These are all like regular audit, and the bill, could have experience. I know that he didn't experience the state income tax, but this Federal Department of Labor's audit, he did. That was actually the beginning of everything. So, audit triggers, report by whistleblowers or discontent employees. DOL targets employers in low-wage industry to discover wage and hour violation, okay? These industries are daycares, restaurants, garment factories, healthcare agencies, motels, hotels, janitorial services, and guard services, and agriculture jobs. Okay? If you're in one of those areas, trust me, your payroll. You cannot just do payroll with the ADP and thinking you're all good. You need to know what your practice in payroll can get away from a DOL audit. You need to have that compliance review. Okay? So that is what Community CPA would offer you when you work your payroll with us, right? Audit prevention. To be successful in your business, you have no choice but follow rules and regulations. How many times I say that, right? And it's not like I'm just, I'm saying something, I don't know. Sometimes people can perceive that to be something not necessary, but I cannot emphasize how sincere I am to tell my small business owners to hear me, because that is the only way we can save ourselves. And you can just imagine what Bills is going through. And I want to update you. And I promise you that I'll make him successful. And I just need to do a lot of things to start from scratch and really see what was assessed and then put that into a good procedure for him. And I also not going to break his bank. It's not like you follow the rules, you're just not going to make any money. That's just totally not true. That's just not true. Okay? You follow the rules, and if the people who work with you are smart enough, know all the rules, then you will save money and also do it right. And you cannot control employees, folks. So because of that, because of the motivation the DOL has for your employees, and you cannot prevent them from reporting you. Some of the report of the employer was totally false. But DOL came anyway, and you have to deal with it. So since you cannot control what your employee does to you, then the only way to control is your own behavior. Do it right, okay? And be sure to keep record of how you paid them. And if your employee tells you that, oh, I can only take cash because I have no bank, well, that's okay. You can pay that employee cash, but you want to have a record of drawing your cash, paying your cash, and a breakdown of what is all included in that payment. I absolutely okay with people to get cash. If they want it, give them. But you want to make sure that you protect yourself for that good record, okay? And I don't know, I suspect the bill doesn't have good record. That's why this happened, okay? Work with your payroll company to make sure that you're doing payroll correctly. If you are in the food industry and you don't even track your tips in, tips out, that payroll company needs to be killed. You go somewhere else, come to Community CPA. And if you are a service industry and you nail service industry, and then you have all of your nail technicians on 1089, and your managers are on 1099, so your payroll company should have give you advice, tell you what is the right thing to do, okay? Engage Community CPA, we can do the compliance review for you to meet with DOL requirement. DOLs is not scary. DOL is pretty well established. They have their formulas. Their auditor just knows how to apply the formulas, and it's not like you're my cousin and I'd be nice to you. There's no such thing in our government. Well, no, there is the thing. But for small business owners, you, me, and others, we don't have the kind of connection that Donald Trump has with the government. So to cut a slack for you, forget it, okay? And the rules and regulation on you, it's just gonna be it is. So don't even think of anywhere you're gonna get some forgiveness, someone just gonna be extremely nice to you, so you do against law stuff and you get away. You can joke about that. No, you don't get away. But you'll be charged very quickly. It won't take so long like how President Trump is going. All right, examples of what DOL is looking to find. And DOL, failure to maintain record of overtime payment to non-exempt employees. Okay, in restaurant, everybody is non-exempted in restaurant, other than your manager of the restaurant, okay? So salaried employee classified as exempt from overtime. So salaried employee, you better know they are qualified, because if they are salaried, of course you don't worry about overtime. But if they are non-exempt employee, man, you calculate every minute, okay? So they need to be paid overtime. And lawful deductions against employee from their wages. Oh yeah, you want, if one of your employee come in dressed so unprofessionally, and you're like, I'm deducting $50 from your paycheck so I can buy you a clothes for you. No, you can't. Unlawful deduction, that money is theirs. Okay, business owners, even though it is you paying it, I am sorry, it's not yours, it's theirs. So don't try to deduct anything. They do not agree. Or they go to DOL to report you, which way you like, right? So insufficient tips that fail to meet employer's obligation. So some restaurants wasn't very successful, so there's not a lot of tips going on, and your waiters and waitresses are paid very small hourly rate. They needed that tips to come up with a minimum wage. So if you knew that doesn't really happen, you need to pay them. You cannot go under the minimum wage. Inaccurate wages payment to immigrant workers and the minors. Yeah, so if someone comes to you, goes, oh, I don't have work permit, I am, illegal, but I want to work for you. I think you need to hire me. I heard that you always hire illegal people, and you just operate like that, and you even hire little kids. to cut meat for you. So if this kind of things happen to you folks, that's wrong. You know that, right? And then don't go like, oh yeah, how did you know? Yes, that is my practice. Come on, welcome. I pay you less, but you're gonna do the same work for me, for like other people. You know, don't even go there. And you tell the person that, no, I'm not that kind of employer, and you can go somewhere else to look for your opportunity. And here we do everything by the rules. Can you say that? As a small business owner, we need to learn to say that, and to say it with a comfort, and to reject with a comfort, to say no with a comfort. Okay? That's very important. All right. Employment tax audit and classification. This is the one that the Bill did not get into. So he did not get into this. I just want to tell you that employment tax audit and the classification audit, that's the biggest audit for small business. It has so many people are watching you, wanting to audit you. And the one is federal, is IRS audit for employment tax, classification, PPP, ERC. These are all related to the employment tax. And the state can audit you for classification by state, the workforce. In California, it's called EDD, and in Minnesota, it's called DEED, DEED. So it's all in that unemployment arena. Okay, so those are classification of audit the state would do. And the workers' comp would also audit you, right? Workers' comp, they don't fight so much about your classification, but they come in, they go, who is your subcontractor? You give them a long list. Then they go, okay, you're gonna buy insurance for all of them. You'll be like, what? Really? That much? And so make sure that if you hire subcontractors, the best way to prove they are your subcontractor is to have them buy workers' comp insurance. And if they have an LLC, they are the only owner of the LLC. When they buy workers' comp, they can exempt themselves from being covered by workers' comp because they're not worker, they're the members, they're the owner. So they still get workers' comp insurance certificate, but there's nobody need to pay. So obviously the fee is less, but it is technically correct. So you can take that as a workers' comp for that subcontractor. So just make sure you know that subcontractors, if you don't want to end up being audited and reclassed as your employee, you need to have insurance. They need to have insurance copy for you. All right. So continue on that. The IRS and the workforce, or EDD for California, DEED for Minnesota. So those audit, they are not. It is a struggle. The auditors will work with you and looking at your workforce, like your total workforce, who are your employees, who are your subcontractors. A lot of time, the state workforce, they move your contractors to be an employee. They say, no, we think they're your employee. They did not register with us as a subcontractor, so they're your employee. And by moving them into an employee category, obviously you'll pay unemployment insurance tax, right? You'll pay amount there, but that's not even the biggest problem you have. Because once they did that, they will submit these people's name to the IRS. They will tell IRS that, look, they got these employees, they have never withheld Social Security Medicare, and here you go, assist them. So you get 8% charge from workforce, but you're gonna end up with 25% charge from the federal government. So it's not a little joke here, and it will break you if you end up in that situation. I know Bill may not have this situation because obviously as a restaurant he didn't have subcontractors, so he probably is okay. This would not be his concern, but I want you to know that this could happen to you, folks, okay? And you think that state audit, no big deal, you're gonna pay, it's manageable, but you don't even know yet the big bill is coming. And the 3 times of what you pay to the state gonna show up at your door from IRS. So do it right. Do it right from the first day. Triggers for a payroll audit. Most commonly is disgruntled worker. If you get audited for your payroll, almost sure that's the case. So the worker may have been very happy to have a flexible schedule and not have tax withheld from her check. Very happy. So he work, not work, he just got a check from you and you don't withhold anything. But at the end of the year, he discovered that she has to pay a lot of self-employment tax, and so she may complain to IRS. So she may goes, well, I made $30,000, but I pay so much taxes. Why? Why they don't take my taxes? So they can file SS8, determine work status for purposes of federal employment taxes and income tax. And this document seek to have the IRS decide whether this person is an employee or is an independent contractor. So when IRS receive that SS8 from your worker, and usually they will reach out to you and for input. At this point, it is not a IRS audit, but it should be very seriously taken into consideration, because if one did that, the second one could do it. Of course, IRS has this 20-factor checklist to check to see whether this person's complaint is legit. But imagine that IRS agreed with this person. So he enjoyed the whole year working flexibly, and then you're going to end up paying his Social Security Medicare, and you're going to end up paying 25% more of what you already paid to this person. Just don't do that. Just don't have that. And if you need to hire, you hire. And when you hire, you need to know your cost. So if you only have $3,000 there, that means you can only hire $2,000 gross salary. You need to leave yourself at least 25% of that money to pay taxes, okay? So don't sugarcoat that you can hire a lot of people when you don't have the money. So small business owners, you want to calculate how many people you can hire, all right? And then the last audit, I mentioned that as a normal, like a regular audit. This is the Bank Secrecy Act, Form 8300 audit. The bill was not audited by this one, but he could be. So I'll give you the reasons that he could be. If he deposited cash to his business or personal account abnormally, $50,000 cash in one shot, anything over $10,000, regularly deposit, oh yeah, he'll be audited. And if a disgruntled employee report him to Department of Treasury about his way of handling the receiving cash. So that bullet point was like messed up. But, so you just call Department of Treasury. Oh, I work for this guy, and his name is Bill. And he always make me to, put the cash away. And I just don't even know why we get so much cash. So I just want you to know because I'm a good citizen. So he'll be audited. Money laundering. If he wire money to overseas regularly, abnormally, $100,000. I mean, Bill is $2.5 million sales restaurant. If he wires money to overseas, $100,000 a month, that is abnormal. Yeah, he will be audited because they might be suspecting him laundering money. If he opened bank account, transfer money in and out, and then, the bank officers felt like, oh, I don't know why he opened so many bank accounts. And the money just in and out, everywhere. That bank officer can report you. Then Bill will be audited. And if Bill does check cashing, wire transfer business in his restaurant, and then he'll be regularly compliance audited. So you see, some grocery store does that, right? You can go to check cash checks and stuff like that. So if he does that, he'll be audited. So these are Bank Secrecy Act audit, and we have quite a few come around, and some of them are from the California area. Just to say that it is a pretty serious audit, and you want to make sure that you don't get labeled for money laundering, right? So with that said, I think I have given you so many possibilities of being audited. The real prevention for getting any of that, it is to do it right. To do it right just means that you have the discipline to know what to do, and to also consult people who know what to do. And then you can put together and make your act properly and run your business properly. And we want to see that happens in our small business world. We want small businesses who stepping into Community CPA store be a successful one, trouble-free one, and be a one that would last for a long time. And we want you to all have the name of your legacy, not just did some businesses and did a business and it did so well, right? So that's really our common goal. It's my goal and it's yours. All right. So my last slide is related to the 3 p.m. webinar. If you have ideas, you want me to talk about something that really close to you, and email Catherine at communitycpa.com. She'll take care of you. And we are the only CPA firm in this country open 6 days a week, 8:30 to 5:30, Monday to Saturday. And we don't, obviously we're not slave drivers here, and we have teams who works Monday to Friday, Tuesday to Saturday. So with that said, I hope to see you again on Tuesday. And on Tuesday, I already knew what I want to talk about next Tuesday. And you remember I talk about these tax strategies and how to save taxes. And one of the things is fiscal year. So to, if you run your business from January to December, you file taxes after December. But if your business really made all the money in the month of December, then maybe you qualify to elect yourself to be a different fiscal year. So that will save you a lot of taxes and really match your income to your expense properly. Okay, so I will talk about that in Tuesday. So I will see you again and on my other webinars, and I hope you have a wonderful rest of the weekend. Have fun.